morning, good afternoon, good evening, traders from across the globe, and welcome to the 1143rd edition of Short-Term Trading Live with Oscar Carboni, and that would be, I guess, me. Good evening, traders. This video is being filmed on Wednesday night for trading Thursday. That's March 6, 2014. As we know, futures trading can be extremely risky, can cause substantial financial loss. You can lose your money, your parents' money, your grandparents' money. You can lose every dollar you've ever seen in this business. So please be careful. Volatility is wide. A stop can absolutely be your best friend, and do not trade without stops. All right, traders, so what's going on? Wednesday night for trading, Thursday, green Omni, and we love to clap for those green Omnis, right? Yeah, go green Omni. Omni sees the market going up. The market looks strong. Bonds, I kid you not, it is just a matter of time. Bonds almost have to come down unless the economy really turns sour again. The bonds almost have to come down, or ZB you might be looking at, almost have to come down in the future unless the economy spins, and I will show you a chart that should prove why. Now, I'm hearing a great deal of talk about China. Oh no, there's a big failing bank in China. It's the beginning. China's going to take down everybody. Where were all of you for 2007, 8, 9, 10, and 11 when the U.S. and Europe went like this and China and the Pacific Rim went like that? Does anyone remember this? So now we're unwinding that. The U.S. and Europe starting to go up and China's starting to go down. That is what's supposed to happen. So you lunatics out there on TV that don't know how to research before you go on television and just wrap that face of yours, do a little research. Well, come on down to livewithoscar.com and let me set you straight before you become a talking head and say the wrong things on television. I couldn't believe my ears or my eyes for the last 2 or 3 days. Remember what happened on the way down, guys. Now we're on the way back up. If you need more lessons, come see Uncle Oscar. All right, enough of you guys from TV. So, traders, here's what I've got going on. The green Omni should take us higher. I am not saying bonds are going down for Thursday and Friday, but I am saying that in the intermediate term, the bonds have to go down and ES will continue higher. With no further ado, let's go look at some charts. Okay, traders, this is what I wanted to show you. This is the Nasdaq, and there is a new kid in town. We are back into this long parallel channel. We held this wonderful average. We are now sitting up here getting ready to build what I expect to be another small F flag straight up. I think we go to this target. It's not a huge amount from here, but I think we're going over 35. We're going over 38.50. That target is somewhere up between 38.30 and 38.50. I think we can easily go there. Let's call it 3800 and be conservative, but that is where we should get to in Nasdaq very shortly. Then you've got another nice picture behind this. Look at the emini S&P. Traders, if you remember this chart I've been showing you for quite some time, we were really worried when we were under the blue rung, right? We made the left shoulder, we made the head, we thought we were going to make a right shoulder. Thank goodness instead you went and made a nice strong F flag, which is what this is right here, and we are about to break out of that F flag. It looks like we are going to vacate the area. And if you've been watching, Omni's had flip-flops like crazy, and when Omni flip-flops like this, it almost always means we're ready to vacate the area. Omni doesn't give you the exact way we'll vacate. That's the day-to-day Omni analysis. But if there's a week passing where you're seeing this from the Omni, this is usually what happens next. You vacate the area. So S&P looking good, Nasdaq looking good. Then another chart I've been showing you for weeks on end, traders, the Dow Jones Transportation Average. And if you recall, I told you that whenever you dip under OTAPMA, it's very, very short-lived and you head straight up. And what happens is new highs. You dipped under OTAPMA, you went to a new high. Dipped under, new high. Dipped under, new high. Dipped under, new high. Dipped under, a new high is coming. That's what comes next. Look at the pattern. There is no arguing with this. Once we dip under OTAPMA, we go to new highs. So new highs would put us at least here. We're here. We're day traders, right? We can get up here. It's a nice trade for trading on Thursday. And then, of course, traders, my masterpiece of the evening is the bond chart. Another chart I've been showing you for weeks and weeks on end. Now, the last time I showed it to you, we were 28 weeks below the 200 bar moving average. We are now 30 full weeks below the 200 bar moving average. The last time we dipped below was way back on the chart that you can't even see because it was in 2006. And if you recall, in 2006, the world was wonderful. The mountains were made out of candy. You know how the world was in 2006, right? The clouds were beautiful. They were singing around you. Well, we were under the 200 bar moving average back then when things were good. We're heading back. Well, we're under there now, and things are certainly getting better. And then you've got my rounding tool. I snapped this on here months and months before we started filling it in. We only filled in here up to about here. Since then, we have filled in almost everything that we would have expected. Now we are under the 200 bar moving average. We rallied right up to this spot. And I say that's about time for a short in the bonds. So bonds are probably going to continue lower along this red line and finally start to plunge. That's what I see. My masterpiece chart for this evening. Traders, pull your own charts, do your own homework. Never take anybody's analysis, never take anyone's recommendation unless it agrees with your own work and analysis. Traders, so you've seen the charts. There's my technical argument for why we've got the green Omni arrow. And that weekly chart I showed you in bonds, it is just a matter of time, traders. You cannot stay 30 weeks below the 200 bar moving average if you're never below the 200 bar moving average without it being very meaningful. So bonds should head down at some point. ES Nasdaq strong, should continue to stay strong throughout at least the beginning of this year. Traders, I'll see you all at livewithoscar.com. Make sure you come on down. Free chat room where I will be there at the helm helping you understand these charts every day and night. Come on down, livewithoscar.com. All right, traders, remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders. I think the Nasdaq is going to take us home tomorrow. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.